In this video, our group will present about Malaysian Ringgit analysis.
Okay, let's start with my part, which is the introduction of Malaysia. Peninsula Malaysia and East Malaysia are the two distinct regions that make up the nation of Malaysia based on the Department of Statistics Malaysia. In 2024, Malaysia's population is about 34.1 million, and there are many different races in Malaysia, which is Bumiputra, Chinese, Indian, and others. In July 2024, Bumiputra accounted for 70.4% of the population. In the meantime, the Chinese and Indian is 22.4% and 6.5%, while the Irish percentage stays 0.7. The percentage of citizens fell from 91.1% in 2023 to 90%, while the percentage of non-residents rose from 8.9% to 10%. There are two major events that affect Malaysia's economy. The first one is the Asian financial crisis, and the second one is the new economic policy, which is aimed to reduce poverty and economic inequality that focusing on Bumiputras, and it shifted the economy from agriculture to industry but raised concerns about efficiency and inter-rating relations. Despite criticisms, it helped transform Malaysia's economy.
Alright, let's move on to my part. Before that, my name is Muhammad Aiman. Did you know Malaysia is a global leader in trade, leveraging its comparative advantage to compete on the world stage? Today, I will give you an overview of our economy, focusing on our key strengths, especially in trade and export, as well as how we are diversifying for the future. Malaysia has a stable economy with over 65% of its GDP coming from trade. We are a global leader in electronics, especially semiconductors, which make up 14% of export. Other key exports include palm oil, LNG, rubber glove, and petroleum, with major market in China, Singapore, US, Japan, and Hong Kong. Malaysia is the second largest producer of palm oil, supplying 28% of global demand. In addition to export, Malaysia's services sector is growing, especially in tourism and healthcare, which make up 13% of the economy. The country is a popular tourist destination and known for affordable, high-quality medical services. On import, we bring in electronic, petroleum, machinery, and chemical, with China and Singapore being key partners. To stay competitive, Malaysia participates in trade agreements like RCEP and is diversifying its economy, focusing on services and new industries. These efforts highlight Malaysia's commitment to sustaining growth and securing its position in the global company.
Hi, my name is Nadra Anate, and I'm going to present to you about the principal trading partners and type of foreign investment in Malaysia. In 2023, global trade grew slowly due to lower commodity prices, geopolitical tensions, high inflation, and semiconductor downturn, impacting Malaysian exports like crude palm oil and petroleum. Despite this, Malaysia's trade surpassed RM2 trillion, with exports exceeding RM1 trillion. ASEAN, China, the US, the Europe, and Japan were Malaysia's principal trading partners, accounted for 67.7% of total trade. China remained as Malaysia's largest trading partner, which is 70.1% of total trade for the 50th consecutive year. ASEAN made up 27.3% of Malaysia's total trade, with Singapore being the top export destination. Trade with the US, Europe declined, and Japan, Malaysia's fourth largest partner, which is 5.9%, saw a 13.8% drop to RM15664 billion from previous year. Foreign investment in Malaysia mainly focus on equity investment and foreign direct investment, which is FDI, in projects through mergers, acquisition, and joint ventures. Manufacturing sector, fintech services, and real estate are some of the most attractive industries to do investment.
My name is Nur Shakira, and I will be presenting on financial regulation, recent trend, and their impact on the economy and currency. Let's start with the key financial regulation in Malaysia. First, we have the Central Bank of Malaysia Act 2009. This act established by Bank Negara Malaysia, which is the central authority responsible for financial and monetary policy. Its main objectives are to ensure financial stability, manage bank and other financial entities, and issuing the Malaysian ringgit. Next is the Financial Services Act 2013. This act is crucial in promoting transparency and stability in the financial sector. It regulates conventional financial services such as banking and payment systems, ensuring they operate within a stable and transparent framework. Then we have the Islamic Financial Services Act 2013. This act focuses on supervising Islamic financial institutions to ensure they comply with the Sharia principle. It also oversees the Islamic money market and foreign exchange market, ensuring stability in Islamic finance operation. Lastly, the Anti-Money Laundering, Anti-Terrorism Financing, and Proceeds of Unlawful Activities Act 2001. This act mandates strict compliance measures for financial institutions to prevent money laundering and terrorism financing. These regulations collectively play a vital role in ensuring Malaysia's financial system remains stable and trustworthy. Now let's move on to the recent trends in Malaysia's financial regulation. In 2002, digital banking licenses were introduced by Bank Negara Malaysia. This is a significant step to support Malaysia's growing digital economy to enhance financial inclusion. The aim is to provide banking service to underserved communities, including small businesses and individuals in rural areas. Malaysia is also strengthening its position as a leader in Islamic finance. For example, the country has introduced Sukuk, which is Islamic bonds, and is expanding Sharia-compliant financial offering. This initiative underlines Malaysia's commitment to sustainable development. Another trend is the tightening of cryptocurrency regulations. Bank Negara Malaysia and Securities Commission Malaysia has been working together to regulate digital asset platform. This step is crucial to prevent fraud, money laundering, and other illegal activities within the crypto space. Next, let's discuss how these regulations impact the Malaysian economy and the ringgit. Firstly, financial regulation has attracted foreign direct investment. This has increased demand for the Malaysian ringgit as investors require the local currency to operate within the country. Secondly, the active role of Bank Negara Malaysia in managing monetary policies and controlling exchange rates has ensured currency stability. This stability boosts confidence among investors and traders. Lastly, stricter regulation on cryptocurrency have helped to mitigate speculative risks. By curbing activities that could destabilize the financial system, Malaysia has safeguarded its economic stability. In conclusion, Malaysia's financial regulation and recent trends have significantly influenced the economy and strengthened the Malaysian ringgit. Through initiatives like digital banking, the expansions of Islamic finance, and stricter cryptocurrency regulation, the country has adapted to global economic trends and technological advancement. This effort has enhanced investor confidence, promoted financial inclusion, and ensured long-term stability in the financial system. That's all from me. I will pass this to the next presenter.
The Malaysian ringgit experienced significant fluctuations in 2020. In January, its value appreciated against the US dollar, driven by non-resident portfolio investments due to improved investor sentiments following progress in US-China trade relations. However, February and March saw a steep decline not just for the ringgit but for the Southeast Asian currencies due to geopolitical risks, falling commodity prices, and the emergence of COVID-19. Despite this, the ringgit recovered slightly mid-year, rising 3.5% against the US dollar. By September, it had declined by 1.6%, reflecting ongoing global and domestic uncertainties. While hopes for economic recovery remain, volatility persisted due to the pandemic, policy uncertainties, and political factors. The year highlighted the fragility of currencies in the face of global crisis. At the start of 2021, the Malaysian ringgit strengthened against the US dollar, driven by optimism about global recovery due to vaccine rollouts. However, from mid-January, the ringgit began to depreciate due to selling pressure after the implementation of MCO 2.0. By March, it had fallen between 0.5% and 6.7% against the US dollar, and rising US Treasury yields attracted investors, strengthening the dollar. Still, the ringgit gained against the yen, euro, baht, and won during the same period. In April, the ringgit rebounded slightly, supported by weaker US Treasury yields, rising oil prices, and portfolio inflows. But with MCO 3.0 in May, investor confidence weakened. By September, the ringgit had depreciated 4.2% against the dollar, affected by rising COVID-19 cases and shifting US monetary policy. Despite challenges, a medium-term recovery was expected, supported by strong economic fundamentals. In 2022, the Malaysian ringgit depreciated by 5.4% against the US dollar, dropping from 4 ringgit 0.1665 at the end of 2021 to 4 ringgit 7477 by November 4, marking a peak to true decline of 12.2%. This depreciation coincided with high global commodity prices, leading to greater inflationary pressure in Malaysia, as exchange rate effects were not offset by other cost reductions. Unlike previous episodes of ringgit depreciation, the impact of inflation was more pronounced, reflected in the Consumer Price Index. The ringgit performance largely mirrored the US dollar strength, driven by Federal Reserve aggressive monetary tightening to combat high inflation. However, the import-weighted nominal effective exchange rate showed the ringgit fare better than many major and regional currencies, with an overall depreciation of just 1.0%. This highlights the ringgit's relative stability in the face of global currency pressures.
The Malaysian ringgit faced significant depreciation during the COVID-19 pandemic due to economic, political and social challenges. Economically, Malaysia suffered its worst contraction since the 1998 Asian financial crisis, with GDP shrinking by 5.6% in 2020. Travel, tourism and entertainment industry were severely impacted by movement restriction, while e-commerce and IT sector thrived. Disruption in China's supply chain and reduced global demand for key exports like electronics and commodities further pressure the ringgit. Politically, the pandemic coincided with a leadership crisis, including Mahathir Mohamad's resignation in 2020 and subsequent instability. The state of emergency in 2021 undermined investor confidence, prompting capital outflow and weakening the currency. Lastly, socially, lockdown in increased unemployment and exposed inequalities, particularly for the B40 income group, reduced domestic demand and higher public debt from fiscal stimulus measures further weakened the ringgit.
My name is Nurul Anis Ashira, and today I'll be summarizing the key points from our analysis of Malaysia's economy, focusing on the Malaysian ringgit. Firstly, Malaysia placed great emphasis on its comparative advantage in the export sector, particularly in electronics, palm oil, and liquefied natural gas. These exports play a crucial role in the country's GDP. Malaysia's main trading partners include China, Singapore, and the United States, while imports such as electronics, petroleum, and machinery are strategically selected to foster industrial development and diversify trade. However, the Malaysian ringgit has faced fluctuations due to the declining oil prices and foreign investors drawing their portfolios, especially during the COVID-19 pandemic. Despite these challenges, the ringgit has shown relatively stable performance compared to other regional currencies. This stability has been supported by national measures aimed at economic recovery. That said, risks remain. Political instability, unemployment, and income disparity can further impact the currency. To address this, Malaysia has implemented key financial regulations such as the Central Bank of Malaysia Act 2009 and the Financial Services Act 2013. These measures have helped maintain financial sector stability. Recent advancements, including digital banking license and Sharia-compliant products, also have strengthened Malaysia's global financial standing. Overall, Malaysia's economy and the ringgit have proven resilient against various global challenges, including the pandemic. Strategic export and import management alongside financial regulation has played a vital role in ensuring stability. Moving forward, Malaysia must remain proactive to address political instability and economic disparities while fostering growth and competitiveness in the global economy. Thank you for your attention, and that's all from our group.